2024 always seemed like it was going to be a breakout year for crypto. And one of the major reasons why market participants were especially excited about the year was the impending approval of a spot Bitcoin ETF, exchange traded fund, or a Bitcoin ETF, if you will. ETFs aren't a new thing. In fact, they've existed in the traditional finance space for quite a while now. But for several reasons, which we'll get into later, the SEC seemed hell-bent on ensuring that they never made it to the crypto space. Well, that jinx has finally been broken. Earlier this month, the SEC confirmed that it had not only approved one, but 11 ETFs that will specifically focus on Bitcoin. So, what are these ETFs? And why should investors be excited about them? Let's take a quick look at everything you need to know about the new products that are currently taking the market by storm. Before we even begin, it's important to understand what a Bitcoin ETF is. Basically, a Bitcoin ETF is a publicly traded investment fund that provides investors with opportunities to invest in Bitcoin without actually having to buy the asset. Unlike the traditional Bitcoin that is bought and sold on cryptocurrency exchanges like Coinbase and Binance, an ETF is traded on a traditional stock exchange like the New York Stock Exchange, the Nasdaq, that type of thing. So when you invest in a Bitcoin ETF, you're not actually buying the asset itself. Instead, you're investing in a fund that holds Bitcoin. As such, the fund basically tracks the price of Bitcoin. When the asset's price rises, the fund's value does too, and vice versa. ETFs are pretty rampant in the traditional space, but crypto companies began applying for permission to list the spot Bitcoin ETFs as far back as 2018. Since then, the SEC has continued to rebuff these attempts. Fast forward to 2021, things did get some clarity when the SEC approved its first ever Bitcoin Futures ETF, but it wasn't the real thing. What the market wanted was a spot Bitcoin ETF, a fund that would track Bitcoin itself and not the Bitcoin futures. So the big news for the crypto market came on January 11th, 2024. After much speculation, the SEC finally confirmed they had approved 11 spot Bitcoin ETFs, marking what has so far been the biggest watershed moment for crypto in over a year. Interestingly, the SEC account on Twitter, or X or whatever it's called these days, actually posted a few days prior that they had made the approval official. But it turned out this was just a hack, and the SEC needed to wait a few more days before actually dropping the hammer. Anyways, let's really go into the meat of this video, understanding the different ETFs that were approved and what makes them all unique. First up, we have the ARK21Shares Bitcoin ETF. It was launched as a joint effort between ARK Invest and 21 Shares, and it trades with the ticker ARKB. ARK Invest is notable for being the first retail fund manager to make a Bitcoin investment. Their CEO, Cathie Wood, is also a notable Bitcoin bull, so it kind of makes sense that they'd want to launch an ETF. Now, the interesting thing about this fund is that it won't charge a single dollar in management fees until either its assets reach 1 billion or for the first 6 months, whichever comes first. The ETF had an inflow of $75 million in assets on its opening day of trading, with an expense ratio of 0.21%. So that's a pretty decent start. Second up, we have the Bitwise Bitcoin ETF. This is the largest crypto index fund in America. Interestingly, the company was also the first one to file for approval for a Bitcoin ETF. And for years, they stuck with the SEC to ensure that they finally got the approval. So if anything, this really is a win for the San Francisco-based company. Now, like ARK Invest, Bitwise is also committed to not charging any management fees for the first 6 months of the fund's trading life, but their fees come in at a slightly lower 0.2%. The fund trades on the NYSE ARKA, and it already holds an impressive $242 million in net assets. Not bad for a fund that's only been listed for a couple days. Third up, we have the BlackRock Shares Bitcoin Trust. Anyone in the world of finance knows BlackRock. The company is the largest asset manager in the world, with about $10 trillion in total assets under management. Over the past few years though, BlackRock has been really bullish on crypto, and many actually believe that the company was very instrumental in pushing for the SEC's final ETF approval. With this fund trading as IBIT, BlackRock partnered with its in-house ETF provider, iShares, to provide a spot Bitcoin ETF for interested investors. The ETF trades on the Nasdaq and already has a respectable $114 million in net assets. BlackRock is currently waiving a portion of its 0.25% sponsor fee, with the company charging just 0.15% of the net asset value of the trust for the first $5 billion in assets across the first year. If the fund exceeds $5 billion of the trust's assets before the 12-month period elapses, then BlackRock will go back to its 0.25% fee. And after the waiver period is over, the original fee returns as well. Now moving along to our fourth fund, it's the Franklin Bitcoin ETF. This fund was launched by Franklin Templeton Investments, a San Mateo-based multinational holding company with about 1.5 trillion in assets under management. Now, not much is known about the assets under management here, but this ETF is actually the cheapest of the bunch, with Franklin Templeton setting the management fee at just 0.19%. Plus, the company is waiving all fees for the first year, or until the ETF hits $10 billion in assets. If we consider the fact that it was the 6th most traded of the 11 ETFs on its second day, this ETF is holding its own rather well. Now we're up to the fifth fund, the Fidelity Wise Origin Bitcoin Trust. Just like BlackRock, Fidelity Investments is one name that rules the asset management world. Just as BlackRock has done, they were quick to hop on the ETF bandwagon. With just $20 million in net assets, the Fidelity Wise Origin Bitcoin Trust has gotten off to a bit of a bumpy start. However, I'm pretty sure that things should start to turn around, especially as Fidelity has waived its 0.25% management fee until July. Now the sixth fund, the Grayscale Bitcoin Trust. In terms of asset managers in the crypto space, no one even comes close to Grayscale. At one point, this company had about 3% of all the Bitcoin in circulation. And with about $50 billion in assets, Grayscale is only growing. If we go back to 2021, Grayscale first floated the idea of turning its flagship product, the Grayscale Bitcoin Trust, into an ETF. The company even went on to sue the SEC after its application was denied, although the green light has finally come. Already touted as the world's largest Bitcoin ETF, the GBTC, which is what it's traded as, holds about $26 billion in assets under management. Of course, this is mostly due to the fact that the ETF started off as a Bitcoin trust, so the assets have been racking up for quite some time. Now that considered, the expense ratio of 1.5% here, as well as a lack of a waiver period, means that this ETF is one of the most expensive in this list. Now if we move along to the seventh fund, we have the Hashdex Bitcoin ETF. This is another highly underrated product among the lot. Launched by crypto asset management firm Hashdex, the ETF trades on the New York Stock Exchange and saw an impressive bump in price of 2.5% on its first trading day. With $16 million in net assets, this ETF isn't doing too badly. However, this fund does have a 0.9% management fee, and I don't know that it'll be enough to draw in the investors, especially in an already crowded market. So this will be something to consider. The eighth fund I'll be covering is the Invesco Galaxy Bitcoin ETF. Invesco and Galaxy Digital, two crypto-focused investment firms, partnered to push their application for a Bitcoin ETF over a year ago. Today, that ETF is now a reality. The product, which has the ticker BTCO, currently has about $50 million in net assets. Interested investors can find it trading on the CBOE. A management fee of 0.39% is attached, although this has been waived until July. The ninth fund is the VanEck Bitcoin Trust. Another OG in the crypto space, VanEck was also one of the first companies to file with the SEC for a spot Bitcoin ETF. So as soon as the approval announcement came, it came as no surprise that the company's product would get the green light too. Befitting of their status, VanEck chose the ticker HODL, or HODL, for their ETF. The product trades on the CBOE, and it already has racked up $81 million in assets. Plus, with an expense ratio of 0.25%, it's looking more like the VanEck ETF is appropriately priced. There is no fee waiver here though, so you want to be careful with this fund. In 10th spot, we have the Valkyrie Bitcoin Fund. This fund is the ETF arm of Valkyrie Investments, a Nashville-based company. However, we should note that European asset manager CoinShares is set to finalize a deal to acquire Valkyrie's ETF arm, as well as their other assets. So in the near future, this product will indeed be managed by CoinShares. Anyways, this Bitcoin fund trades with the ticker BRRR and is currently available on the Nasdaq. It's got about $28 million in net assets, and Valkyrie has announced a 3-month waiver on the 0.25% management fee. And finally, we have the WisdomTree Bitcoin Fund. It's pretty fitting that we'd set this one for last though, as the fund has only managed $3.25 million in net assets for now, and it's got 70,000 outstanding shares. The expense ratio of 0.3% seems a bit higher than many of the other ETFs we've studied, but you do get a waiver for it, and that lasts for the first 6 months or until the fund hits $1 billion in net assets. So in total, the 11 ETFs have their peculiarities. There are easy lines of convergence, such as the fact that most of the ETFs have waivers on management fees, but there are some of the funds that actually stand out. If we take Grayscale as an example, the company has leveraged its Bitcoin trust and converted it into an ETF, hitting $26 billion in net assets to become the most liquid of the ETFs. However, the management fee of 1.5% also seems pretty steep. If we look at the other ETFs, they are pretty much aligned. Management fees range between 0.2 and 0.3% for most of them, and liquidity levels are pretty consistent across the board. The approval was definitely a huge moment for the crypto industry. Coin prices have been on a rebound this year, but the fight for crypto ETF approval is one that's been raging for years now. Several companies have initially applied to list spot Bitcoin ETFs, but the SEC kept bouncing them at every turn, and at some point it kind of seemed like there would be no way an ETF would ever be approved. As for how the market reacted, you can imagine that things were initially bullish. Bitcoin's price had crossed the $45,000 mark just a few days before the news was made official, but the approval actually pushed the price higher, up to about $48,000. Then came a quick crash. Bitcoin tumbled back to $43,000 as reports claimed that a lot of traders had taken their profits and capitalized on the initial hype. Now, I know everyone's hyped about these ETFs and what they could mean for the market, but I think it's really important that we pump our brakes for a minute. Like every other investment, Bitcoin is a speculative asset, and this means that there's an inherent risk to it. If you're even familiar with the history of the market, you'd understand and realize that Bitcoin has always moved pretty topsy-turvy. It's been up and down for the longest time. And as we all know, the highs can be pretty high and the lows can get pretty depressing. Even Gary Gensler, the chairman of the SEC, has always commented on the volatile nature of Bitcoin as his primary reason for not approving any Bitcoin ETFs. And many in the SEC have continued to trumpet that sentiment. Considering that Bitcoin ETFs literally track the price of the asset, they pretty much automatically inherit the same volatile nature. And if anyone wants to invest in it, they better be able to understand that risk. So there you have it. Spot Bitcoin ETFs are here to stay, and 11 companies already offer these products to investors. The reaction so far has been pretty swift, but we'll definitely be keeping an eye out for how the prices change down the line. Let me know down below in the comments what you think will happen in the near future. Will these ETFs kickstart a new bull run for the market? Are we poised for another massive surge in prices this year? Please let me know down below. If you're new to the channel, I post a lot of content in the personal finance and investing space. Please make sure to subscribe down below to make sure you don't miss any of my future content. Thanks for watching, and I look forward to catching you on the next one. Cheers.